We have this big cut from Moody's today. We want to dig into the financials. Read across the board after the firm cut credit ratings for a number of these banks. 10 small and mid-sized banks, also put a number of others on watch. Sarat, I'm going to start with you because I believe that you own U.S. Bancorp, which is one of the names that's on watch. Right. Why are we seeing so much bloodshed today, though? Because of all the concerns that Moody's lists, none of these are particularly new.
No, this is old news, and this should have come out in the first quarter when we had the debacle with the banks. I think what you're just seeing is a short-term reaction where you probably have a bunch of the computer funds, exactly algorithms, okay, selling short on the financials. You get the regionals, but all this was baked in. I mean, the valuations of these companies was baked in as soon as all this happened in the first quarter. So it's not a surprise. But, if you're a long-term investor, there could be some good opportunities. I mean, U.S. Bancorp is not a small, mid-sized bank. It is one of the largest banks out there. So when you look out there, and, I like the large-cap banks, and some of them are on sale today. So a J.P. Morgan and a Morgan Stanley, all of them are just, it's kind of being thrown out with the basket. And I think you're going to see some opportunities there.
That's interesting. So this is not a fearful day for you at all. These are things that you've already known, and you're looking for opportunities.
No, it's kind of like when we downgraded our debt for our country. Like, all this is news that's not any different. So why should it have this effect other than hey, we're rebalancing in terms of algorithms or things like that?
And Stephanie, you have some financial positions as well. Does it look attractive to you today to dig in a little more?
The sector did really well last month. It was up 9%, and that's because earnings came in much better than expected. The banks had 19% earnings growth. Financial overall had 7% earnings growth, and that was really a positive surprise. I wasn't even expecting to see the numbers that good, to be honest with you. Now, that being said, Courtney, while I think that this downgrade is late, I think that the regional banks are going to be in a world of hurt for quite some time. They've got to increase their capital levels, right, from Basel III endgame. They have a couple of years to do it, but they also have a high concentration in commercial real estate, right? And I think you are seeing cash sorting, even though it's slowing. I do think you're seeing market share take from the large cap banks. So I think you want to be very careful in terms of which banks you want to own. And I own the big ones, right? Morgan Stanley, Bank of America, Schwab. Those are where I think that there are still value. I don't necessarily want to buy it today because they've just had a big rally from their lows, right? So I think you want to wait, be patient. And I do think, though, that you don't want to be owning some of these regionals at this point in time, because I do think there's going to be a lot of market share lost over the next couple of years.
And I think it's interesting, downgrading after the earnings, right? When you did have, well, why not do it before or have them respond to it? Now it's kind of like, hey, we just had these earnings, and we know the small banks have talked about this, the regionals have talked about it, and it's just not commercial. It's also, people who have individual homes. There's a slowdown there. Credit is tightening. We know that. That's kind of baked in. So I think we're aware of that. You see that in the yields of some of these banks as well in terms of where the bonds are trading. So it's buyer beware, but we've been talking about that all year.
And we might get closures. But you know how many banks we've seen that have failed since 2009? 513 banks have failed. And a lot of them you never even heard of, right? So it's going to happen. It's okay. But the large banks are in so much better shape because of the excess capital that they've had to have in the face of all this regulation. And so I think that's, again, one of the reasons why you want to own more of the large names versus the small ones.
And I want to bring Bryn in because, Bryn, I believe you are in some of the bigger names here for banks, even though we're seeing the large banks also fall in sympathy today with what's going on with some of these regionals on this cut from Moody's.
Right. Well, I mean, we've been really underweight banks. I only personally own Goldman. We sold out of our small cap value factor-based ETF at the end of 2021 because as you're going into this big Fed tightening that we saw in 2022, then all of a sudden that regional banks aren't going to do well. I mean, I continue to think that the smaller banks are going to be anesthetized because not only do you have their denominator, which are deposits, are under siege because of where T-bills are or where money markets are. And so you're going to continue to see a lot of, I think, uncertainty from the C-suite of these regional banks in terms of how much lending growth they can actually do. Because I think that denominator is still in flux. I also think that you saw today, this didn't get as much news, but in Italy, they proposed a windfall tax on those banks. So I think banks in Europe as well as the U.S. are under pressure. I think Steph is, spot on. She owns the bigger banks. And if you look at with earnings, that's where you saw solid earnings. And so I think that you also saw in July a massive move in the regional bank index, which is, also located in small cap value. And I think that trade is unwinding. And I do think it's relevant today when they came out to say, hey, you know what, this is a short-term phenomenon, I believe July was. I think this banks over the next year or two are going to continue to be under fire, and you would want to stay underweight this sector that just doesn't have these structural, not only regulatory issues, but also just that denominator effect of where interest rates are.